Traders, good morning guys. How are you doing today? There are many people watching us, so guys, how are you doing? Is everyone doing all right? I hope so. Okay, so we are ready to start this Tuesday live trading session. First, let's start with the Great British Pound against the Japanese yen. Guys, on the weekly chart, we had a reversal price action. This one here. Remember, I was talking about this currency pair for a week or so, and Magiol, first like on YouTube. Thank you so much, Magiol. I missed that. Ahmed, how are you doing, friend? Nice to see you around. Awesome. I hope for both of you guys trading is doing really good. So on the weekly chart, now guys, I would like you to understand something. Maybe some of you trade on the 1 minute chart. Maybe some of you trade on the 5 minute chart. Maybe some of you trade on the 4 hour, 1 hour, whatever you do, okay? The market moves the same. Analysis is the same. Market structure, market behavior, price behavior is equally, it's the same. Okay, understand this please, because doesn't really matter if I do analysis on the weekly chart or if I do analysis on the daily chart. The way the market will move, it's going to be equally the same on all time frames. The only difference on the lower time frames, the lower the time frame will go, because we will see more data with more data, let's say, within a day, the swings, they're going to be more in these time frames. That's the only difference. Okay, so you need to have that, what we call in trading, the eye, to read the market faster. Now, a good approach that I use for the last 12 years in trading, that's how I learned how to trade, to be honest, for the reason I didn't really stick to the lower time frames at the beginning. I was trading on the daily chart, doing analysis on the weekly chart, and that helped me. And that's, again, if you, I'm not saying you have to do that, but if someone is new here, or if someone is struggle with trading, maybe it's you can try it and see how it works for yourself. If you try to do analysis and look for reversal price action on the weekly chart and you execute on the daily chart, it's a great way to approach the markets. Or you can look for strong or for well-defined levels of resistance and support on the weekly chart, and you can go to the 4-hour daily chart and you try to trade the reversals. Okay, these are two different schools of trading. They are extremely powerful, very, very high probability trading approach. So you can use it in your benefit. So what I was looking since last week is the Great British Pound, Japanese yen, and the New Zealand Canadian dollar, because we identify market structure on these time frames, on the weekly and daily time frame. You go on the 15 minutes 4-hour chart, guys, I guarantee you, you're going to find 20 market structure opportunities on the 4-hour chart. Absolutely. I'm not saying that the Great British Pound against the Japanese yen and the Kiwi against the Canadian dollar were the only opportunities. they were good opportunities, and they are good opportunities on these time frames. On every time frame, on each different time frame, you're gonna come across with different kind of opportunities. Something maybe that it's not visible on the weekly chart. On the hourly time frame, it's going to be a nice smooth uptrend or a downtrend or a well-defined range that you decide to buy the support and sell the resistance. Okay, I hope this is informative and it helps you with your trading. So back to the charts. In this particular one here, I was looking for weakness around this monthly resistance, and on the daily chart last week we came across with these two dodgy candles, and then they set up the tone for the market to move lower, but the confirmation was really the reversal price action at the end of the weekly trading session last week. So at the end of last week, the market created an inside doji at resistance. It means if the buyers, they were strong to push the price higher, they will have done it previous week. Now this doji here, it could have been traded as a standalone with an entry right at the Asian session open with a stop loss above here. It was about 100 pips. Market already moved more than 100 pips. This particular currency pair, on average, it moves 130 pips a day. So imagine for 5 days to get some weakness, you're going to make 4 to 1 or even 5 to 1. The high reward to risk ratio, guys, it's not only on the lower time frames, it's also on the higher time frames. Okay, welcome to those that just joining us. AJ, any trading change today? Yes. Somebody share the link. Yeah, thank you so much. I'm here. Thank you, guys. Hope you learn a lot along the way. And the other way, guys, to trade without waiting for the reversals, you can trade this on any time frame. Okay, you just pick up a higher time frame. Let's say you prefer the 4-hour analysis. You do your analysis on the 4-hour time frame, and then you go to the 15 minutes or 30-minute chart and execute from these levels of the 4-hour your trade. So on the daily chart, after this weakness here, I entered short, but I didn't keep the trade. I got out at this point here, and I told you right at the beginning of the week, I was looking for that exactly reversal. It came as a doji candle on the weekly chart, so I entered another trade. It was yesterday, and it was somewhere, I wasn't awake exactly when the market opened, but just slightly during the London session, I entered short. We are still in the trade. Stop loss is about 110 pips so far. I'm looking for the first target, this inside support, just above 186. You can mark it on your chart. If the price penetrates without reversal price action, I will definitely keep the trade until 184.5. Another currency pair that it's on the scope, that the one I like, it's the New Zealand Canadian dollar. Excuse me, guys. New Zealand Canadian dollar, it's equally a good one, and it was a very good one. Remember last week we explained that this range after the uptrend proceeded the uptrend, followed by this consolidation. It finally broke to the downside decisively. We need 2 days, the rule of 2 days close, to concur that this is a valid breakout. And then we said we will be waiting for the price to come somewhere close to these levels. We marked them. They used to be on our charts since last week. Okay, so I'm sure you have them if you were around on this webinar. Price moves upward, comes and retests this area. Now, there are two ways, guys. Now we'll teach you how to trade the trends on the daily chart. The best way to trade the trends on the daily chart is with two methods. The first method, after the price arrived at an area of resistance, if you're in a downtrend, on the daily chart. But remember, this type of trading requires the market to be trending. We trade this only on trending market. We don't trade this when the market moves sideways or in a range. After we pick up the resistance in a downtrend, we go on the 4-hour time frame and we find reversal price action. For some people, this candle here, it's a 2-candle reversal because it has a bearish body. It's not a reversal because the price still makes higher highs and higher lows. This one here, it's not a reversal because it's an inside candle and it's not a bearish engulfing. This one here was the reversal candle. This one here, it's what we call an outside bar, and at the same time, it's a hammer. Excuse me. It's a hammer at resistance. This is the reversal candle you will have been waiting for, and you could have entered short here, entry, stop loss very tight if you are extremely aggressive in trading to put your stop loss above there. I will have put the stop loss for this currency pair approximately 20 pips apart, entry here, stop loss 20 pips above, and I will be waiting for 2 or 3 to 1 target. Now, because the market is trending, we could have also stay in this one and wait the market to test the recent support. Okay. Next one now on the list, you can mark this on your chart, guys. Another promising currency pair, it's going to be the Euro-Canadian dollar. The price broke outside of this consolidation. If today the price will close below this, under this support, we will treat it as resistance and we will start looking for short positions. You can go immediately to the lower time frames and trying to pick up the swings of consolidation, break out to the downside, or you can wait to play time frame correlation on the daily chart. You wait for the price to move lower and then retracement somewhere at an area of resistance. You go to the 4-hour chart, you pick up the reversal trade, you can make minimum 3 to 1 on this trade. Imagine, guys, and that's not the first time I say that. I told you many times in the past. You pick up every month, every single month, a couple of pairs will trend, even for a week. You pick up some good entries on these pairs, you're going to make easily a decent reward to risk. If you aim for 2 and 3 to 1, you're going to make some good returns. So, and then it comes down to the trader's trading personality. If you are the trader that desperately needs to trade 4, 5, 6 positions a day, then of course you're going to look to trade the 1-minute chart, the 5-minute chart. But if you are looking to trade some kind of high probability trades, and if you don't have the privilege of time to be in front of the screen, or if you don't want to be in front of the screen all the time, all day long, you can use some alternative methods with price action and higher time frames, which they are extremely powerful. New Zealand US dollar, this is the daily chart. The price moved under this low point in a form of a downtrend. Now we expect that if the market it's going to move higher, it's going to come to retest this area here, and then it's going to move lower if it's not going to penetrate that one. Remember, non-farm payrolls on Friday, but also tomorrow the tomorrow Fed will announce interest rates. Here is the calendar for today. Early this morning, in Japan they reported the unemployment rate. It was better than they expected, so less unemployment for December, and then it's positive for the Japanese yen. Australian retail sales, again early this morning, it was 1.6% the previous month. Expectations to see a drop in Australian retail sales to minus 1.7%. But what's the significant with that is that this report, guys, refers to December. When you read the calendars, you need to understand, or you need to have someone like me to explain you exactly what information you extract. This is not the only information you extract on the calendar. This is in this column the information, the best information you're going to extract exactly as it is. It's only the interest rates and the non-farm payrolls. The rest you have to pay attention to which month they refer. Now, December is a special month, right? Because everyone goes out, they do shopping, they spend money. Retail sales refers to consumers, how much money they spend, how many sales, in general, the volume of sales happen within a country. So in December, everyone was buying goods and services based on Christmas and New Year celebration. So if expectation was a drop in retail sales, it means maybe the economy is not doing that well. Maybe it's more unemployment in the country. Maybe the salaries or the wages they drop. Okay, think about that for a while. And the actual came out with as a lower number than even the one was expected for December. So that tells me the economy is not doing really well. So understand this kind of news events. Trade of balance in Switzerland. It was I think this refers to billions, 3.8 billions, dropped down to 1.2 billions, maybe weakness on the Swiss franc. Later, Germany gross domestic product will be reported. Expectations, as you can see here, guys. Then Eurozone inflation expectations, you see here refers to January. So we'll see how things gonna develop with this one. So back to the charts, and let's see a few more of the pairs before we wrap up for today. Someone asked, which time frames do you prefer for analysis? Usually I use the weekly. The time frame, it's gonna depend only on the time frame, then you're gonna go to execute. I use the weekly chart for analysis, and I execute on the daily chart to pick up reversals, or if there is a trend on the daily chart, I will pick up entry points based on time frame correlation on the 4-hour chart. So mainly I go weekly, daily, but if daily is trending, then I will use the 4-hour chart to capitalize on that one. Australian dollar at this resistance. I like that this market is getting weakened, and fundamentals, they help as well. Price made a new high here and then retraced 100% of the move. This is a daily chart. Now it's coming back up here, and maybe we're gonna see, if we keep an eye on the 4-hour chart, guys, maybe we're gonna see some good reversals around this area. It's early to look for reversals, okay? Note this down, the resistance, it's up here. I see traders make all these mistakes all the time. They are impatient. The resistance is not here. The resistance, it's up there. Okay, here is the resistance. Or here is the resistance. Wait for the price to move away from this rectangle, and I believe we're going to see some good. If a reversal price action occurs here, we're going to look for short. Euro, it's a bit tricky on the daily chart. It's finding some support here. I don't like the euro. It's within this move to the downside, so only way to capitalize is on a lower time frames. Pound, very messy here. I'm not really interested. On Thursday, the Bank of England will report interest rates. We will see that on Thursday. But again, we need the Great British Pound to break either preferably to the downside or even to the upside. Then we're going to look for opportunities. USD Canadian dollar, as we expected the price to move to the downside, of course, because of this resistance. USD Swiss, nothing here. And USD Japanese yen, yesterday bearish engulfing. Look at this, guys. Bearish engulfing. If you want to go on the lower time frames, 15-minute, 1 hour, 5-minute chart, you can look for opportunities to capitalize on the move to the downside. And the last one, German 40, for our friends, they're going to try to trade the German 40. Price broke this today also above the high of the previous day, and it looks more bullish than bearish. Gold, really nothing here. It's within this area of resistance and support. Need a break to the upside or to the downside. And WTI, let's see if this is gonna move lower based on this price action yesterday. However, what I believe it's gonna happen, the market, it's gonna just keep rallying unless the non-farm payrolls and the Fed show something else on Wednesday, tomorrow. Guys, I think that's all from me today. I hope you enjoy the session. I hope you find some value. Please make sure you subscribe on our YouTube channel, on the anywhere you prefer, even on the TradingView platform. That's not a problem. If you are watching us from Trading Live, you can how do you call it? On the channel, you can leave some rates, okay, some comments, some rates under my profile. I will appreciate it. Anyone wants to sell the gold? I don't know, guys, if you want to sell the gold right here, maybe at this resistance, you better wait for some reversal price actions to occur, because the market, it's maybe going to keep rallying. We don't know. Okay, guys, enjoy the rest of your day, and I will see you tomorrow, of course, at the same time here at live with MarketMinds Mastery Analysis. Bye, everyone. Take care.